When is Bitcoin likely to top? How is the short-term price action developing? And will altcoins enter a parabolic season? These are questions we're answering in today's video. Let's dive on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the macro and the short-term charts, discussing macro expectations, possibilities for short-term pullbacks, key horizontal levels that you should be paying attention to, and of course, the total altcoin market cap. Are altcoins about to move into a parabolic phase, or are we not quite there yet? Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, you can join us in VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our group chats, our general chat, our trading chat and education chat, our daily video, our help, our news, and our trade setup chat. If that is what you're interested in, go ahead and contact me in the pinned comment of the free channel. The channel has been around for 46 months. You can find our entire trading track record and a video showing you inside the channel by clicking these links. Contact me by clicking my name, and I'll look forward to hearing from you. Yes, go ahead, guys, and jump on in. So as we can see, over the past 24 hours, Bitcoin has decided to continue toward the upside. We have seen a push to, yet again, a new all-time high at 76.8k upon the release of the data, being that interest rates have been pushed back down another 25 basis points. Now, we've discussed many times on this channel that reducing interest rates on a macro scale is exceptionally bullish for risk assets. If we zoom out and take a look at our flowchart over here, we can see that eventually, as a consequence of interest rates falling, we see the dollar decrease in value, we see inflation start to begin to increase, but with the reduction in interest rates, the most acute response is going to be debt to service ratios decrease, which means your debt obligations, being your debt obligations on short-term and long-term interest loans, are decreased, therefore available cash flow increases, which facilitates spending in the economy, particularly enables people to enter risk assets as they have that available cash flow, particularly with the dollar decreasing in value. It is a good hedge. So when we take all of that together and we extrapolate that to a higher time frame, we have a scenario where companies are not only acquiring cheaper debt, but the repayments for that debt is cheaper, and they're rotating that money into risk assets, bolstering the asset market as the dollar decreases in value while inflation rises as a consequence of increased spending in the economy. And this big cycle goes on until, again, it reverses at some point. So interest rates are expected to continue downwards for many months, and with that, we are moving into a period where risk asset growth is likely to start to heat up again. Again, this is great for Bitcoin and great for the rest of the market. Moving over to the market data, we'll come back to everything else in just a moment. The market data for the last 24 hours, 24-hour liquidations, and 24-hour volume. Liquidations are down 49% at 309 million, with 188 million coming from shorts, 120 million coming from longs. So initially, straight away, we're seeing a little bit of indecision happening at these levels. A lot of people trying to jump into shorts, but still a lot of movement toward the upside. Liquidations, very high. Volume, very high. 211 billion, down 38% in the last 24 hours. The short-term price action, as we mentioned, has been more or less choppy, but the choppy price action has been generally moving in an upward trajectory. Moving over to the S&P 500, the S&P 500 has hit our first macro target. Now, if you've been following the channel, we have been bullish ever since the breakout over here in May, April 2023. And in fact, we have been calling for a $6,000 target ever since this point, all the way back over nearly 2 years ago, right over here. Now we have reached our first target of 6,000. From here onwards, we do not have particular price targets. We are playing from a game of invalidation, meaning we are going to expect the price to continue until the validations of the structural pattern of which has been developing since that point invalidates. What does that mean? Simply, until we start breaking below these higher highs, this is going to be a higher high, this is going to be a higher high, this is going to be a higher high, until we break a weekly candle below a higher high, we are expecting continuations upwards where we develop new higher highs and new horizontal supports. If we do see a weekly candle penetrate one of the higher highs, that will be a macro sell signal for us, and we'll be expecting a macro reversal. So for now, we are expecting the price to continue to rise, but overall a fantastic move at S&P 500. In fact, if we just take a percentage range over here, that is around a 43% gain on the S&P 500 since we flipped bullish. For the S&P 500, that is exceptionally good. Now, if we go over to Bitcoin, guys, if you've been in our Bitcoin positions, if you've been in the VIP, if you've been in the channel, if you've been watching YouTube videos, you would know we have been bullish since 16.5K. We are up a tremendous amount on those Bitcoin positions. We can see already we're up 360%, insane stuff. So congratulations for following. We also did take new positions at 49K where we posted on Twitter that we expected the bottom to be in. That position is up 54%. Again, we have actually scaled out 20% of our Bitcoin at around about 75.5K. We've sold around 20% of our bag. We are leaving the rest for now. But that is it, guys. Let's jump into the crux of today's analysis. We're going to quickly take a moment to discuss BitGet, BitUnix on BingX. If you're interested in getting a lifetime trading fee discount of 15% off all your trading fees, and that 15% can build up to a discount of 45%, sign up to BitGet, BitUnix, or BingX with the links down below. You'll support me making the content, and you'll support yourself in your trading journey. Go ahead and sign up to those links. You can go ahead and sign up to any of those. You'll get 15 to 45% discounts on your trading fees. We'll play an ad, and we'll jump back in. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So as we mentioned, Bitcoin has seen a fantastic rally to a brand new all-time high, and we're in this uncharted territory now, which means we have no historical price action at these levels to indicate how the price is likely to react at these particular price points. The chart is unfolding, it is developing as the price action is moving on, which is very exciting, of course, but of course, it makes it a little bit harder to predict exactly where these top points for Bitcoin are likely to come in. And that is why we have particular methods such as date range trends, we have historical movements and ranges, and we have particular indicators such as momentum indicators to track the overall developing strength of the price action to get an indication when the move is likely coming to an end. But first and foremost, guys, let's just take a look at this horizontal channel. This horizontal channel, of course, broke out. We were talking about this channel being a bullish channel for the last 8 months. We had a lot of people tell us we were wrong, yada, yada, yada. Doesn't matter. The channel broke up as expected. And the reason it broke up as expected is because the channel was moving as expected. The momentum was developing as expected. And we saw that develop and eventually result in a move toward the upside. We saw since that 49K retest that essentially all bearish momentum that developed from the first high into that 49K low, all this bearish momentum dissipated, and we entered a period where we had positive momentum. We saw higher highs develop on the price action. We saw higher lows develop on the price action. With that, if we look to the weekly chart, we saw a positive momentum shift occur just after that 49K retest, suggesting that during the period between that first high and the breakout on the RSI, the momentum went from negative to positive, indicating that buyers were back in control from that 49K low. And again, if we have positive momentum in any sort of consolidation, the probabilities of a break toward the upside significantly increase, and that is exactly what we have seen. If we are looking at this channel from a structural perspective, the measured move expectation dragging from the breakout point, we take the initial breakout point to, again, the depth of the channel applied to the breakout point, the expected target for this move is around 85,000. That means we are expecting Bitcoin to reach at least 85,000 on this particular move. Now, this may take some time. We may see some short-term pullbacks, but it may continue upwards. We may develop patterns, but essentially what this means is before we invalidate these lows, we are expecting a move into the $85,000 region. So if we drop back below these prior lows, that is when we'd expect the move to continue downwards. However, until we remain above these lows, we are expecting 85,000 to come from the consequence of the breakout of this consolidation range. Now, we discussed in yesterday's video various methods we can use to predict when the top of Bitcoin is going to be. We're going to be taking a look at a couple of those again in today's video because they are of absolute significance as we move into this uncharted territory. Again, there is no best way to predict when the top is going to be for Bitcoin because, again, the top is in an area of where we don't really have historical data. Again, all key price points, as I mentioned in yesterday's video, come from psychological levels, meaning these levels are of psychological significance, or they are of historical significance. So any price point you look at from a horizontal scale has historical or psychological significance. When we move into areas of uncharted territory, we don't have historical price action, we have only psychological significance. So we have to go ahead and infer points of which that could be areas of which we are looking for tops to be. So if we take a look at the 12 to 18 bar theory, again, we are taking the date range trend from points of significance. In this instance, we're taking the breakout of the bear market resistance to the all-time high, that is 18 bars, and we are taking again the breakout of the all-time high to the next all-time high, which is going to be 12 bars, and we apply that 18 to 12 bar theory from the breakout of the prior all-time high right over here at 12 bar distance and the breakout of the yearly resistance, which is the bear market resistance at an 18 bar distance. And that gives us a date range between the dates of March to April 2025. Essentially, this is measuring the speed of which the price action has historically gone to a new all-time high after breaking through major points of resistance on both the yearly chart and monthly chart. And again, the yearly being the bear market resistance, and again, the monthly being the prior monthly all-time high candle. So it takes the measured move expectation on a horizontal scale and it applies it forward to give us a expected top date for Bitcoin. That is going to be between March and April 2025. This does not give us a particular price point, just an expected top date, meaning if we see Bitcoin reach a possible new all-time high, or we are seeing major weakness develop within this range or after that range, we have to take that at face value and apply more significance to that, assuming that may actually be the top for Bitcoin. Whereas if we see a potential top for Bitcoin prior to that date, we might be able to apply a little bit less significance to that and therefore potentially assume that it's just a local top, not a macro top. That is an incredibly important point. The next thing I would go ahead and advise everyone to look at, and what I am looking at particularly, is I'm looking at this trend from now an invalidation perspective. When we're in consolidations, when we have historical data to trade, we can use confirmation methods. Now, confirmations are generally just insurances you pay to make sure you are right. I posted this in the Telegram channel yesterday, in the free channel, a little bit of motivation, a little bit of information. I wrote, confirmation is the insurance you pay to be right. By missing a few percent to massively increase your probability of success is a worthy few percent to miss. Trying to squeeze every percent out of every trade you take is not smart, it is simply greed. At some point, you lose more profit by not taking profit than you would miss by exiting slightly early. So what I mean by that is when we are moving into these uncharted territories, the best way to trade is based on an invalidation method, not a confirmation method. Just as confirmation can be used as insurance to be right, invalidation can be used as insurance to not be wrong. So taking a look at this, we use historical technical indicators, which are derivatives of the price action. These indicators have historical significance because of what they mean. They show us the developing real-time changes in demand of the asset. That demand is represented or reflected by the price, as the price is a representation of what people value the asset to be, and what people value the asset to be is a representation of people's purchases and sell of the asset, real-time traders, and all of that is put on the chart in a visual candlestick formation, and the indicators are derivatives of that which express certain characteristics, in this instance momentum, volatility, and all of that goes to suggest strength. So the reason I can trade at such a high probability of success is because I don't look at the price as much as you probably assume I do. I apply very little significance to the dollar value. I am more or less watching how that strength is developing, how the change in strength is developing. At what point do we see significant shifts between buying pressure and selling pressure? When do we see selling pressure diminish? When do we start to see buying pressure diminish? And then we can use that to infer future potential price movements. So in this instance, again, we are macro bullish and we will remain macro bullish irrespective of what the price is while we have not reached March to April 2025 and while the price action is sitting above the leading span A of the Ichimoku cloud and the Gaussian channel upper band. While we sit above these levels, the expectation is that the price action will continue upwards as we have seen historically until we break below both of these levels, marking a macro reversal. This will come after the top. Therefore, it is not a top indicator, but it is a point of which we shift our macro bias to downward, okay? It is a macro bias shifting indicator. When we see this go off, we are more inclined to expect continuations lower, and thus, if we see this occur after the March to April period, which we expect the top to be, we would then have to apply some more significance to this and potentially take it as a macro bear market signal. So when these levels are lost, that is when we will flip bearish. Now, we very well could see something like this, right? We could see the price action push upwards well into this range, and eventually these indicators will catch back up, and eventually we will drop below, marking the top for Bitcoin here, and that is going to be the macro selling point, and then we enter a new bear market, and then the cycle continues, etc., etc. That is very likely what we could see, but upon the breakdown of those 2 points would suggest that the prior top was the top, and that is going to be the macro bear market signal. So trading based on the invalidation method is very handy if you are moving into ranges of price action that do not have historical data to trade off. Now, historical data is so important because it shows us what the demand is at the price action at those particular times. It shows us what buyers and sellers have done historically at these price points, and what they have done historically results in information we can use to infer what they are likely to do now based on the developing characteristics of the trend. Moving over to the total, actually, you know what? Let's go to short term. The short term price action is looking pretty okay. Now, the reason I say it's looking okay is because, not because we've seen a fantastic move, we've seen an absolutely amazing move. And you know what? Bitcoin is going to be looking very, very amazing while it sits above this 73 to like 72.5k region. We sit above here, we are expecting continuations high. I'm not really too concerned. Only if we drop below around 72.5, 72.75, would I then expect a bit of a correction for Bitcoin, maybe back to 70k, but I don't think that is likely. I think a worst case scenario, we might see a move back into this region and then we push back upwards. That is essentially what I think is to be worst case scenario. The reason I'm saying this is because I am seeing some bearish divergence develop here on the price action. We do have an hourly triple bearish divergence, which again is represented by this RSI trend line. We have got 1 rejection, 2 rejections, 3 rejections. This essentially means as the price action has been creating these higher highs, this strength has been dissipating. So the strength by the buyers has been dissipating, which could suggest that this here is exhaustion. We are seeing a bit of exhaustion in price action, and exhaustion can lead to corrections into demand. Demand being our areas of support, which is right over here, where buyers will step back in, grab that sell side liquidity, and push the price action back upwards. Now, the one thing I'd be watching for this exhaustion to dissipate would be this hourly RSI to break through. If we see the RSI break through, that would tell me that this exhaustion that has been developing has completely been absorbed, meaning the exhaustion has not been effective enough to push the price action down. The selling has tried to push the price action down. However, they have failed, and it is very likely the price will swing into these highs again. We are looking at this upper trend line. We are looking at 78,000. We are looking at 79,000 for a target, where then we are very likely to see a rejection, because by then momentum will very unlikely have pushed above this prior high. We might even see the RSI push into 75 maybe, again creating another bearish divergence, where then we would then expect a correction back down to a potentially higher level of support at 75k, where that cycle then repeats. Okay, so that is what we're looking at on your short term, which means essentially if you are macro if your eyes on the macro, if your mindset's on the macro, there's really nothing to be concerned about. I think the charts are looking fantastic. I think we go much higher, but on the short term, there is some exhaustion, and I think there is a chance we do see some pullbacks at some point, whether that be one more move up to 78k if momentum is able to absorb the selling pressure, or if this selling pressure is able to actually push the price down and break below this uptrend, we are likely going to see a breakdown of this rising channel into our prior areas of demand. That is how I'm playing it, guys. Let's move over to the total altcoin market cap. The total altcoin market cap is looking fantastic. Now, there are a few levels I'm watching, and I guess the first level I talked about in yesterday's video, which is the breakout of this horizontal range. And we have done that. We have broken through the range, which means you would have already noticed that in the last few days, altcoins have been doing very well. And we said already, if we are able to break through this horizontal range, we are going to see some strong rallies develop for altcoins. We're going to start to see altcoins move up, and that is kind of what we expect up into around 760 billion, okay? We're expecting that. There is one key level of resistance we are watching, which is going to be this diagonal level. Again, this diagonal level is simply going to be the downtrend of this price chart over here. Do I apply a lot of significance to diagonals spanned across multiple years? Not really, I don't, but it's an area of interest, not a confirmation point or a particular resistance, simply just an area of interest. So we do see a rejection from here. That would then confirm that this is an area of interest, and we could see a move up and then back down to retest. But ideally, what I am watching for now is I am watching for a retest of this horizontal and then continuations upwards. If we do not get that retest, that is totally fine. We could just see direct continuations. But what I'm not watching for is I'm not watching for a close on the 3-day back below around 637 billion. We close the 3-day back below here, we're back in the channel, we run the risk of moving back into this lower area of that triangular formation. Not very good. Overall, macro bullish, expecting continuations of 760. Again, we break 760. Well, then the sky is the limit for altcoins. We could definitely see a move up to 840. We break under 40. This is the parabolic. People are asking, Whale, when is the parabolic phase? The parabolic phase is when we break this yearly high, okay? So we break 840, that is when we enter the parabolic phase. If you're an altcoin investor, you probably want to be in a little sooner than that. Again, there's always going to be a risk in trading. There's never a point in time when it's safest. There's never like the safest point to enter, okay? There's always going to be a degree of risk. So you have to decide that on yourself. Do you want to try enter sooner and then have a lower probability of success but a greater potential for profit? Or do you want to wait for that confirmation, give up a bit of that potential profit but have a lower risk of failure? So these are questions you have to ask to yourself. Again, everyone's risk management is different. You have to make that decision for yourself. But overall, I think while we remain above this level, I think altcoins have a good shot provided Bitcoin holds it together, particularly with Bitcoin dominance looking like it could fall apart here. But altcoins really won't go parabolic until, again, the total market cap increases beyond that point and Bitcoin dominance drops below this uptrend. We break that uptrend, we see Bitcoin dominance drop, and we see the total market cap pump. We'll see altcoins go ballistic. Thanks for tuning in. Have a fantastic day. Catch you guys on Sunday's video. See you then.